All right, everyone, welcome back for another episode of Carnivore Trades. Today is Thursday, November 17th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here. So we had a gap down open today, down into the 390 level. You can see on there that has been a critical area of support and resistance really since July, or actually really back to June. And bottom line, they held that by the end of the close, or by the end of the day. So 100 moving average got back tested there. We did fade a little bit in the afternoon, and then we kind of just squeezed up into the last half hour or so. It's definitely been a bit of a tumultuous week here trading. I really can't wait for Options X to be over with. And again, like I said the other day, we were due for consolidation anyway with that big move up. And then you add Options X into the mix, and we're just getting this back and forth, just total chop fest here. Lots of fake moves, fake breakdowns, fake breakouts. I'm just ready for that to be over with soon. We also have next week, something I haven't mentioned until just now. It is a holiday week. So markets close Thursday, obviously, and then a half day on Friday. A lot of the time you'll see institutional investors kind of take off, maybe even the Friday following, so tomorrow morning even. Maybe after the open, these guys will leave, and they'll take most of the, if not the whole week off. So something to consider here. And we did back off today again, but again, it was not on very heavy volume. If you take a look at the spiders, there are just 68 million shares there by the close. Taking a look at the ES, pretty much the same thing here. So not very heavy volume there on the ES on that little back off. But overall, I saw a lot of bears kind of getting excited yesterday and today, like, oh, we're losing momentum, we're fading down, and really all we did was back test that 100 moving average. And on the weekly, it's really kind of just a 20-week moving average test. So there's really nothing wrong here with the pattern. Again, it's just a bullish inside bar on the daily, and you had a little test candle today, and it's looking like it passed the test. Again, it took really to the last 20 minutes, but they did pop it up, and that's what matters, is the close, not how it opens. And we did get a pretty decent close here on the ES and on the spiders, all things considered. Tomorrow, if we do head up, I mean, it's anyone's guess, but I don't think we get through 400 or 4,000 rather on the ES/SPY, just because of Options X. So if we do get a gap up or some type of a continuation to that last little surge that we got today, I think we're probably capped here, at least for the week. Now next week, again, light volume, it favors the upside to an extent. Usually that's sort of the upside, that's sort of the rule of thumb. So you give the market an upside bias during a holiday week. This year, however, it hasn't really been the case. We had MLK, that shortened week. We had major volatility there. I believe, 4th of July, there was lots of whipsaw going on there. I want to say Memorial Day. Yeah, Memorial Day. Well, not quite with Memorial Day. We had it. Yeah, no. So that was one that was pretty robustly bullish. But point is, since this year, and actually going back to last Thanksgiving, I remember specifically, this was that huge VIX blow up. Remember, that was the day after Thanksgiving, where we gapped up from 18 and change all the way up to 26, and then we almost cracked 30 there. So that was that huge whipsaw, and it's really been like that the last year. It's been kind of unpredictable. Again, typically I give the market the upside bias into the holiday week, and I can't rule that out now. It does feel like we're kind of repeating this type of August pattern here. We came down, we put in a low, chopped around, had a push up, little pullback, little flag, and then kind of a gap up into that trend line. Kind of similar, like move down, little chop, push up, pull back, push up, pull back. If you get another green day with follow through to that 400 handle tomorrow on the spiders, you have to think we're probably going to go up there and test that 410 area. Especially, I don't think we'd close above 402.31 tomorrow if they cap us at 400. But again, that's something that we'd look for possibly next week. Again, we're getting up there, and you got to think, if they can't break 390, if you're not going to break down, you're going to break out, right? So that's where you go. So you go to the next level. So again, that downsloping trend line 410, major resistance at this pivot here. So if we get up there in any sort of straight line, I think that would be probably a high risk reward for some type of a short opportunity. But again, we're not there yet. I know a lot of bears are getting excited. I want to short too, but You got to be careful in this market. It is a tough environment, especially when I see light volume like that. That tells me there's not institutional participation, and that's probably why the dip got bought, because it's just computers and retail trading. Anyways, over to the Qs. Again, the Qs actually showed a little bit of strength today, up 22 basis points. You can see the semis. We'll talk about those in a second. Gap down and really right up to the flat line immediately, and then really just kind of held the gains all day. So semis did finish up 75 basis points. The Qs had a nice robust move earlier in the morning than when the spiders were still range bound. So a little bit of money flow into tech, but again, closing negative still, down just 22 basis points. Again, still kind of hanging in there, chopping around on this trend line. We got rejected the other day at that 100 MA. If you put in a higher low, then I'd give it the upside bias. Again, I've been telling you guys that 300 handle is I think kind of the magnet level. So maybe we get up to that next week if we do get some follow through on this rally. Definitely can't rule that out. But for now, just a little bit of backing and filling and kind of a test candle. Really all things considered, very much like the ES here. You can see the NASDAQ, the NQ, basically testing that 50 moving average and then getting a bit off it, as opposed to the 100 moving average with the ES. Anyways, so we mentioned the semis. Again, finishing higher by 75 basis points. This actually finished green. So again, I know everybody's yelling about Nvidia's earnings. They were pretty bad, but you can't argue with the market. So it was either priced in, or the market's just in that kind of mode right now where it doesn't really care. And it's climbing the wall of worry. We talked about that yesterday. The bond market's a mess. The Fed speakers were out in full force today, and there was some bearish things said about rates. I think Bullard said he could see the terminal rate at 7% or something like that. The market just kind of shrugged it off. Again, when you don't see, guys, you got to pay attention to the volume. That tells you a lot. When I see light volume, declining volume after an up move, it usually just indicates backing and filling. Will this eventually come back and bite the market in the ass? Absolutely. But for now, you got to recognize the environment you're in. Much like in August, like I was banging the drum on a daily basis saying, look, guys, bonds are not confirming this rally. Bonds are not confirming this rally. Get ready. But we weren't, FOMO shorting it. I mean, we did pick up shorts along the way, but we weren't FOMO shorting it like a lot of people were, and a lot of people got hurt on this squeeze here. So again, just recognize the environment you're in. If the market, if NVIDIA has terrible earnings, which it did, and it rallies back to the flat line. I mean, it closed down 1.46%, but basically rallied back to the flat line in the morning and then, kind of faded. But the semis sector, the sector as a whole, was up in a down market. It's telling you the market doesn't want to fade right now. So definitely have to respect that here. Again, the levels haven't really changed. We're still holding that daily hanging man on the SMH right into that 200 moving average red bar. So until that's taken out, this could still be a top technically. But you do have room for a higher low in place with today's nice little, dip and flip, I guess you can call it, on the daily. And then, if you get through that, I could maybe see upside to about 238, 240. But for right now, again, market's holding up okay, and the semis are telling us that they want to hang in there at least for now. IGV, so cloud software down 2% on the day, really kind of a laggard sector. Again, a lot of this, I believe, has to do with options X. But if I can get the charts to load here, but IGV was basically sideways pretty much all day long, gapping down into that 50 and 20 moving average, and then just a little doji there. Again, nothing terrible there. This has been weak. We've been talking about that recently. In fact, it's almost kind of the same chart as Microsoft. Microsoft makes up a big chunk of that IGV, but again, still a lot of resistance up there around 250 on MSFT, but IGV, again, still that, I think that 282, 283 area, if you go up there and test that, would be pretty major. But again, down again today, and definitely lagging to the downside. So we're definitely keeping note of that. Moving forward, Dow Transports down 1%, but actually finished off the lows. A lot of the downside was in the first really 10, 15 minutes. Actually, well, the first hour, and then we bottomed out and rallied back basically to that 200 moving average. Just hanging in there. You do have potential for a higher low now. Could it go up there and test 15,000? Yes, there's a lot of resistance up there. This is your breakdown. That was your sell-off, right? Went up there and back tested it. There's lots of supply up there, so they will turn into sellers if we go up there and test that. But for now, Dow Transport's holding in and hanging on. Interest rates, so 10-year up 2.25%. really just getting a little bit of a dead cat bounce here. Same thing with the 30-year. Let's flip over and talk about the yield curve. So I want to make a correction yesterday. So I did the Fed funds rate. There we go. Fed funds rate is actually 3.85, not 3.08. That was I'm not sure TradingView had an outdated chart on there. It is 3.83. So that does change things, because now a 50 basis point hike next month would essentially get you in line with the 2-year. Although the 2-year was up, like, I think 10 basis. Yeah, the 2-year yield was up almost 10 basis points today. But 3.85 plus 50, 4.35, that does the job. It doesn't have to be exact, but it's got to be close. That would do the job, which means the Fed would not have to hike rates anymore. However, with inflation at 7%, they can't start doing QE either. So this is the problem. This is the box that they're in right now. But I do want to make that correction, though, and distinction, because it's obviously very important. 50 to 100 basis points is a big difference with the FFR. But again, 3.83, so plus 50 would get you in line. In any case, 2-year was higher today. Still kind of just bear flagging here. I'm going to flip back over to the actual 2-year, because that's the one I'm used to charting. But ZT again, so kind of bull flagging here. Again, trend is still down. If this starts to break down again, then it really puts the Fed in, they have more work to do. But for right now, if we were just to hold this range, the Fed would be fine with a 50 basis point hike. So just be aware of that moving forward here as far as ZT, the 2-year Treasury note, is concerned. Anyways, XHB, again, nice little test candle. This actually, I'm starting to kind of favor this for an upside move here. You tested that green bar low. I like that. Inside bar, you held the 100 moving average. You're above the 100, 20, and 50. It's below the 200, but you're backing and filling underneath it. So I don't have a problem with home builders here for a pop. And again, I think I said ITB, that can get up to that 65, 50, 66 handle. Again, same thing, inside bar, nice little bit off the low. So these are holding up okay. If they lose that level, then they're in major trouble. But if the market holds up, they'll hold up again. Same thing with VNQ. If it loses this level on a closing basis, right? We tested it today. We closed above it, so it's still safe. On a closing basis, if it loses this low, it's in major trouble. But for right now, it can still play out that inverse head and shoulder target all the way up to almost 94. So that's what I'm looking at there. On the VNQ, XLF financials here, again, same pattern as everything, back tested, essentially the 200 moving average, the green bar low. This can still get one more ABC up, but it is starting to get overbought and extended here, so bear that in mind. Broker dealer, same thing, tail candle, 20 moving average, back test of 460. So green bar low again, so same kind of deal here, pretty much across the board in equity markets. Crude actually took a little bit of a dump today, so finally a little bit of action in crude. There does look, contract rollover, it looks like, was today. So maybe that had a little bit to do with it there. And then obviously options X is tomorrow. So we'll see how it behaves around $80. I'm very interested to see what it does tomorrow. But interesting, it's starting to dip here post-election a little bit. Not quite what I expected, but again, we'll watch the levels and respect the charts. Again, still looking at this trend line. This trend line is super juicy on the downside. Doesn't mean you couldn't get a bid before that. I could see it putting in a low. There's a lot of support at this green bar here. So, but either way, this trend line is super juicy, especially when you consider you'd make kind of a lower low here. You'd make new 52-week lows if you tested that. And that would kind of get, like, probably stop people out. I like when that happens. So we'll be watching that. But crude definitely on the radar as it's finally kind of doing something of note here. XLE back testing the 20 moving average, again, getting a bit off that. I think this probably has one more pop in it, and then it'll be time for a correction. XOP and OIH, basically the same thing here. Gap down and then a rally back to the flat line. Nat gas had a nice day, but still kind of a nothing burgers. You're still stuck below this 650 level and 50 moving average. We'll see how it behaves tomorrow. Again, there's probably a good amount of supply up here around, that 200, this candle here. I'm not in love with the pattern, and I'm not trying to chase it here. So unless it shows me something good, I will step aside and let everybody else play with that. Dollar index, it got a nice bounce the other day. Again, nothing much here. I'm trying to put in kind of an inside pattern. If this consolidates further, it can go lower. So beware of that. And that would be your case for a move up in the spiders, possibly to that 410, 412 area. So watch the dollar here. Gold, again, pulling back as you'd expect with the stronger dollar today. Silver, same kind of thing. Silver actually got hit a little bit harder, but again, it was a little overbought here short term. It's still above the 20 moving average. If it loses that, that would be a little bit of a concern. But for right now, it's hanging in there, and we'll just leave it at that. Platinum back below this green bar low here, but above the 20. So this may be in for a little bit of backing and filling. Ultimately, no real problems here. But I do like platinum on dips moving forward, and then copper down 2.5 here. Again, probably wants to go down and test that 360 area. We'll see how it behaves if and when it gets there. All right, and then lastly, Bitcoin, you guys know what I'm going to say. There's nothing new to add. Really just continuing that bearish inside bar. And the longer this plays out, the bigger that base gets. So the worse the case gets for crypto as well. If the equity markets hold up, who knows? Maybe you can catch a bid here. But for right now, I do not like that look on the daily or weekly time frame on Bitcoin. Yeah, wrapping up. Again, bottom line, spiders test the 100 moving average and 20-week moving average. They're holding up fine. We have a holiday coming up next week. There will likely be very light volume unless we get geopolitical news, which I cannot rule out. But you generally want to give the market a neutral to upside bias during these kind of time periods. And I think the market, especially with that NVIDIA earnings reaction, the market's talking to us and it's telling us it's not quite ready for sell the rip mode just yet. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.